I've been trading for over 3 years now, and I've done every single one of these mistakes, way more than once. These are the habits that quietly destroy your progress, and most traders don't even realize they're doing them or how destructive they are. We're going to go from the small ones that stall your growth to the big ones that can ruin your accounts. I'm curious to know which ones you find yourself still doing or had the hardest time getting over. So let me know in the comments. I want to track this. All right, first we're going to get into the trade that I took today. So I was looking for a long here. The MA wasn't up quite the 50 points that I would want. However, that purple line I have marked there is at 25,100. So that was my area. I'm trying to look at the bigger context and I'm trying to look at like if I'm getting into a long, do I have some upside targets for it? Um, just because people have pointed it out to me that I need to sort of like broaden my scope on this, and I think that they're right. So I spent some time pre-market looking at support and resistance. I decided on that 25,100. Then when I watched the action this morning, I looked for certain areas to hold, and that was a big one that I decided if that holds up, then I do want longs. And it pretty much worked out with my strategy A. So I felt confident going into this trade. It had about a 13, 14 point stop. And my TP is, I think I got 29 points on it. Oh, I just spoiled the outcome. But yeah, so the trade wins. You can see my hand hovering over there, like right before the target. I was thinking like, oh, I just kind of want to get out of this. But I held. Um, I think my next target to the upside was 180 and then 200. It wouldn't have got there. It would have come down and taken out my stop. So I'm happy with the trade. It made $114, and I'm probably just going to start in my Take Profit Trader account. They have a wallet feature in there, so I can just like it's only over $56 right now over the buffer, but I think I'm just going to daily take out whatever's over the buffer. So at the end of the day, I think I'm just going to transfer that $56 over to the wallet and protect my money and just kind of let that wallet slowly grow so that I can't just have one bad day that wipes out everything. Trader math. When you sit down with a calculator and you go, okay, if I make $200 a day, that's 50 grand a year. Now, if I spread that across 20 accounts or 50 accounts, I think that this hurts because it turns trading into like a fantasy projection instead of skill development and, discipline and patience. I think it really sort of sells and reinforces the fantasy and the dream to ourselves and not what we actually need to do. Um, I think it's common because math feels rational, but trading doesn't follow math. um, if I have a winning day today, that doesn't mean I'm going to have a winning day tomorrow. So I can't extrapolate it out over the year that I'm going to do the exact same thing every day. It just doesn't work that way. And I also think it's funny that we never do this in the reverse. I don't look at a bad week and go, I lost $300 this week. What if I lose $300 across 20 accounts across 3 years? Um, my husband does that math all the time, but I've never looked at it that way. Only the reverse of I had a good day, multiply it by 20, let's see what it is over a year. Oh my God, how amazing is that? Strategy hopping. Why it hurts you? It I think it just every time you do it, it's going to reset your learning curve every time that you're switching. And you also don't give your strategy that you're working on enough time to see if it actually works. And it's also terrible for your discipline. I think it's common because we're chasing relief from losing, not actual improvement. It's easier in the moment to just blame the strategy, head over to YouTube for another one and start, trading a new strategy instead of actually digging into your psychology and discipline. I think that finding a new plan is easier than just sticking to a plan. Listening to other traders' live streams while you are trying to trade. I did this for way too long. Why it hurts us? Because now you're trading someone else's conviction, not your own. It stops you. I know it did this for me. It stopped me from taking my own trades because I didn't want to go against the, more successful, more experienced, profitable trader. What I've learned though is that most of the traders we see online making tons of money either got rich before they became profitable traders, which is a completely different ball game than, the one we're playing, or in some cases, they're just straight up frauds. So listening to them and comparing ourselves to them is just not helpful. Um, I think that this is common because confidence is contagious until it isn't. And I think when we lack confidence in our own trading, which we're all going to, I think, until we're actually profitable and we've been consistent for some time. Um, so when we lack confidence, for me anyways, I just wanted someone else's voice in the background being like, yes, I'm also taking this long. And then I'd feel like, yeah, it is a great trade. So we got to get away from that. I advise everyone to not listen to other traders while they're trading. Trading too many accounts at once, especially when you're a newer trader and you're not consistent and you're not profitable yet. Why it hurts us? I think it splits our focus and our emotional capital. And it can disguise the actual damage of your tilt days. Like I've had days before where I'd blow 3 eval accounts and then I'd hit the max target, like the max daily target on the fourth. And I'd walk away being like, yeah, this was a good day. And it's like, no, you lost, however much money, $6,000 on those other 3 accounts before you managed to make, 1,500 on your fourth. Like it was just very bad for my psychology and how I looked at my tilt days. And I didn't face them the way that I should have. And I didn't analyze what was going wrong and what I was doing wrong and how I was approaching things. Because I could walk away being like, well, I'm very close to being funded again, and then just forget about what I had done before that. I think it's common because the illusion of, multiple chances instead of just mastering one. And then also this with trading, it always comes back to the patience and like the speed trap of wanting to get there quicker. Like it takes a long time. We're obviously frustrated. We're sick of that and we want to get there faster. So how can I get there faster? I can add on more accounts. Not using stops. Why it hurts us? Without an exit plan, a small mistake can quickly become a big disaster. I think that it's common because avoiding the pain of losing feels easier than just facing it and accepting the loss until that loss is huge. Always use stops, and don't move your stops. Moving your stops should be in here as well because when I started, I didn't use stops and then I started using stops. But when I started using stops, I was constantly moving them and not trailing stops. I was moving them to make my losses bigger to avoid the loss. Adding to your losers, or the nicer way of putting it that makes it sound more technical, dollar cost averaging. Why it hurts? It increases exposure when you should be reducing it. Um, I think it's common because it's so hard to just accept that we're wrong. So we dig ourselves an even deeper hole. The first time I discovered, we'll call it dollar cost averaging, it was right before I took over the trading and my husband was showing me how to do it. It was in an options trade. The trade was not going well. It was against me. I was upset about the money I was losing. And then he goes, oh, well, maybe this is a good time to add one on. And he added one on. And I was like, oh, that's genius. The trade, of course, ended up losing and it lost more money than it would have had I not added on. I'd like to say that I learned my lesson the first time, but of course I didn't. And I've done it many, many times since. And sometimes it works out and you feel like, oh, I'm a genius. That was really, a good move to add on there. But the majority of the time, it just blows up in your face. Bailing on your winners, taking 10 points when your target was 50. Why it hurts us? It caps your upside while your downside stays the same. It also muddies up your stats. I fumbled the ball twice last week. One trade, I was trying to trail my stop and I took 6 points on the trade instead of, I don't know, the target was a lot. So I didn't take what I was supposed to. I only took 6 points. And then the other one, a couple days later, I only got 15 points instead of it was at least a 50-point target. Just because I couldn't get my target moved in time. The market was just moving too fast. And it kind of ruined my stats as far as like average winner, average loser. So I'm a little bit upset about that. Um, why is this common? Why do we struggle so much with holding our winners? Um, I think it's just it's discomfort and it's fear of giving back the profits. We feel stupid and full of regret when a trade's going our way and then it reverses and hits the stop, right? Like we've all thought, oh, I should have just taken the money. Why didn't I take the money? I could have had a little win instead of a, medium-sized loss or whatever. So we're looking to protect the win instead of following our plan. Obsessing over the P&L and trading the P&L. Why this hurts us? Because it shifts your attention from the process to the outcome. Um, I know that when I've done this, and I've been pretty good lately at being focused on the process, but it's really hard not to slip back into it. I don't have the P&L on my chart, but it's still mentally there. I have to work to make sure it's not there. I think it's so common because the brain treats that floating number like social media likes. You get addicted to checking your P&L. Um, when I've traded my P&L, it's obviously a disaster, and I'm sure many of you can relate to that. Trading when you're emotionally off or you're just ignoring your emotions entirely. We talked about this yesterday in more of a female context, but obviously it definitely affects everyone. Why it hurts us. Your state of mind is your edge in trading. If it's compromised, then every decision that you make is going to be skewed. Why is this common? I just never wanted, I think for me, largely it was like the impatience and the speed thing again and wanting to make money. I don't want to, have to take a day or God forbid a week off of trading. I'm going to set myself back when in reality, the opposite was true. By trading during those times, I was setting myself back. So another mistake that I've made way more than I would like to admit. I think it's common because traders think discipline means blocking out feelings. I've heard this so many times. Like you need to be a robot, it needs to be mechanical, you need to feel nothing. Well, I think that that's pretty much impossible for the majority of us. We are going to have emotions, we're going to have feelings, and when we try to block them out, I think that's when it leaves room for them to take over. I think we need to work on being aware of those emotions and honest about them so that they don't take control of us and our trading. And if they are at sort of a peak, then we at least have the awareness to make the decision of, okay, I'm not going to trade. Or at the very least, I'm going to size down and I'm going to really tighten up on my rules. If I normally take three trades a ugh, 3 trades a day, I'm going to cap it at, 1 or 2. And maybe I'm going to cut my position size in half. Um, Talking to your spouse about trading, trying to get them interested in trading, trying to get them to understand what you're going through. They're not going to. Why it hurts us? It's, your partner hears risk and chaos, and, you just hear misunderstanding. It builds pressure and resentment instead of support. I think it's common because we want validation. We want our partners to be, passionate about the same things that we are, um, but we end up getting neither. When I did this, I'll show you the clip here. When I did this little interview with my husband, I was not expecting this answer on the multiple choice question I gave him. I have a multiple choice question for you here. What has been the worst thing about my trading for you. Uh, A, listening to me talking about trading. B, my
A.
mood. B, my moods after a bad trading day. C, the frustration of watching me make the same mistakes over and over. Or D, the money I've lost.
Still A.
Still, the talking about trading is the worst part of it for you.
Yeah. Sometimes it's very difficult to listen to. And then I
Because
feel pretty bad when I hear you speaking and I have no idea what you said because I completely blanked out.
oh, so it's like you don't like me talking about like my setups,
No, I hate it.
strategy stuff. Okay.
It's the most boring thing.
Okay. Most boring thing. I don't want this video to be too long, but I think that I needed some honorable mentions here because I guess I've just made so many mistakes over the years and had so many bad habits that I just had too many of them to choose from. All right, so let's quickly go through these honorable mentions. Overtrading and revenge trading. Trying to win your money back is how you just lose it twice. Trading without journaling. If you don't know what you're doing wrong, then it's really hard to fix it. Ignoring market context. I'm guilty of this often. Uh, your setup's fine, but the environment isn't. Um, every system fails when it's in the wrong conditions. Yeah, someone pointed this out to me in the comments a few days ago that they're like, hey, there was this, the Trump tariff stuff, and you're just trading it like it's a normal trading day, and it's not. And they were right. All right, last one here, neglecting self-care. Not sleeping enough, bad food, not taking breaks. This is like it's trading looks so easy, like we're just clicking buttons and making money here, but it's actually like high performance pressure decision making. So we need to be ready for that and prepare ourselves for it the best that we can. So, are you like me? Have you made all of these mistakes and fallen into all of these bad habits throughout your trading, or did you manage to avoid them somehow? Um, if you're still making some of these mistakes and have these bad habits, I think breaking the bad habits is probably the hardest part of trading, but it's also where the growth happens, and we can measure it. We can track how we're doing with breaking these bad habits. So if I've gone through this list and you've written down a couple, or more than a couple that you're still struggling with, pick one to fix. Well, the week's almost over, but pick one to fix next week. Don't try to fix them all at once. Discipline builds one habit at a time. It's a slow process, but it's one that we need to go to if we want to stay in this thing and be long-term profitable traders. Thanks for watching. I hope you liked the list. If you have any that I missed, please let me know. It's crazy. I put these videos out and then someone says something in the comments and it's like, "Ugh, how did I miss that? How did I not think of that thing?" So if there's some bad habits that I missed on my list, let me know what they are. I'm not sure if I'll be back here tomorrow because it's Friday and I've got some work that I'm supposed to do at the house and just, a few things going on. So if I'm not here tomorrow, I didn't blow up my account. I just had to take the day off from YouTube, not from trading. All right, we'll see you tomorrow or Monday. Have a good weekend, maybe.